The stock market is filled with individuals who know the price of everything but the value of nothing.
This quote highlights the importance of distinguishing between the short-term price fluctuations and the long-term intrinsic value of stocks. Understanding the underlying value is crucial for successful investing.
In the long run, stocks outperform bonds, bonds outperform bills, and bills outperform cash.
Jeremy Siegel emphasizes the historical trend of stocks delivering higher returns compared to other asset classes over the long term, providing investors with growth and wealth accumulation opportunities.
Diversification is the only free lunch in finance.
This quote emphasizes the benefits of diversifying investment portfolios. By spreading investments across different asset classes, industries, and geographies, investors can reduce risk without sacrificing returns.
The key to making money in stocks is not to get scared out of them.
Jeremy Siegel emphasizes the importance of maintaining a long-term perspective and not succumbing to fear or panic during market downturns. Staying invested allows investors to benefit from the potential growth of stocks.
The greatest enemy of a good investment strategy is a great investment strategy.
This quote cautions against the dangers of overconfidence or relying too heavily on a single investment strategy. It encourages investors to remain flexible and adaptable in response to changing market conditions.
Time is your friend. Impulse is your enemy.
Jeremy Siegel highlights the value of patience and disciplined investing. Allowing investments to compound over time can significantly enhance returns, while impulsive decisions driven by emotions can lead to poor outcomes.
Long-term investing works because the power of compounding is truly a force of nature.
This quote emphasizes the compounding effect of long-term investing. By reinvesting dividends and capital gains, investors can harness the power of compounding, leading to exponential growth of their investments.
Don't look for the needle in the haystack. Just buy the haystack.
Siegel promotes the concept of investing in broad market indices, such as exchange, traded funds, ETFs, rather than trying to pick individual stocks. This approach allows investors to capture the overall market returns.
It'd be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas.
This quote emphasizes the importance of patience and a long-term mindset in investing. It discourages investors from seeking short-term thrills and instead advocates for a calm and steady approach.
Valuation always matters, but sometimes it matters a lot more than others.
Siegel acknowledges the importance of valuation in investing. While the intrinsic value of an asset is critical, market conditions and investor sentiment can cause temporary deviations from the underlying value.
The four most dangerous words in investing are, "This time it's different."
This quote serves as a reminder that investors should be cautious of believing that current market conditions or trends will permanently alter the principles of investing. Historical patterns tend to repeat themselves.
The most important quality for an investor is temperament, not intellect.
Siegel highlights the significance of emotional control and discipline in investing. Being able to stay calm and rational during market fluctuations is often more important than having superior intelligence or knowledge.
Investing in stocks is an individual game, not a team sport. It's all about you and your goals.
This quote emphasizes the personal nature of investing. Each individual has unique financial goals, risk tolerance, and time horizons, making it essential to align investment strategies accordingly.
The best investment you can make is in yourself.
Siegel highlights the importance of self-improvement and continuous learning. Enhancing one's skills, knowledge, and abilities can have long-lasting positive effects on career growth and financial success.
There's no shame in losing money on a stock, or worse. Everybody buy
does
more
it.
of it when the
This quote emphasizes the importance of recognizing and cutting losses in investing. Holding on to a declining stock without considering the changing fundamentals can lead to significant.
The single greatest edge an investor can have is a long-term orientation.
This quote emphasizes the benefits of having a long-term investment horizon. Short-term market fluctuations can be unpredictable, but focusing on long-term trends and fundamentals increases the likelihood of success.
Don't get caught up in the short-term noise. Focus on the long-term trends.
Siegel advises investors to ignore short-term market volatility and instead concentrate on the underlying long-term trends that drive market performance. This approach helps prevent reactionary and emotional decision making.
The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are.
This quote encourages investors to focus on their personal financial goals and adherence to a disciplined investment plan rather than fixating on benchmark comparisons or short-term market fluctuations.
The stock market is the story of cycles and of the human behavior that is responsible for overreactions in both directions.
Siegel highlights the cyclical nature of the stock market and the role of human emotions in driving market volatility. Understanding these cycles can help investors make better informed decisions.
The key to successful investing is avoiding major mistakes.
This quote emphasizes the importance of risk management and avoiding significant investment errors that can have a lasting negative impact on portfolio performance. Prudent decision making is crucial for long-term success.